Ladies and gentlemen, many believe gold is the ultimate hard asset, but history shows that the asset most overlooked is often the one that delivers the greatest surprise. That metal is silver. Silver is not the loudest asset in the room. It doesn't dominate headlines. It isn't aggressively promoted. Yet beneath the surface, it is building something powerful. Silver today represents one of the most structurally undervalued assets in the market. Markets move in cycles. Before every major expansion phase, there is compression. Volatility contracts, sentiment fades, attention disappears. That is exactly where silver stands now. While investors chase trending assets, stocks, crypto, real estate, silver has been quietly stabilizing, forming a long-term base. This is not weakness. This is preparation. Historically, silver tends to lag at the beginning of precious metal cycles and then lead aggressively once momentum builds. It frustrates investors during sideways phases, shakes out impatient holders, and then accelerates when positioning becomes light and expectations fall. From a technical standpoint, silver's multi-year structure shows accumulation, not distribution. Major support zones continue to hold. Sell-offs lack follow-through. Downside momentum is fading. That behavior signals absorption, stronger hands stepping in patiently. But silver is not just a monetary metal. It is an industrial necessity. Silver is embedded in solar panels, electronics, electric vehicles, medical equipment, data centers, and modern infrastructure. As global technology expands, so does silver demand. Unlike paper assets, silver cannot be created instantly. It must be mined, refined, and transported processes that require time and stability. When demand rises faster than supply can respond, prices don't simply rise, they reprice. What makes silver especially powerful is its dual role. It behaves as both a monetary metal and an industrial commodity. In inflationary environments, it attracts capital as a store of value. During economic expansion, it is consumed. When currencies weaken, it gains relevance again. Few assets benefit from multiple macro forces at the same time. Silver does. Relative valuation also matters. Historically, during strong precious metal cycles, silver often outperforms gold, and it does so dramatically. But before that outperformance begins, silver usually underperforms. That underperformance builds energy into the system. When capital rotates, silver rarely moves slowly, it accelerates. From a psychological perspective, silver is currently boring. There is no widespread excitement, no euphoria, no crowded positioning, and that emotional neutrality is often the foundation of major trends. Big moves rarely start with noise. They begin quietly. Technically, the longer price compresses, the larger the eventual expansion. Think of it like a coiled spring. Each failed breakdown strengthens support. Each controlled recovery confirms accumulation. When resistance finally breaks, it is not a casual breakout, it becomes a repricing event. The macro backdrop adds another layer. Global debt levels are rising. Currency systems face pressure. Policy decisions prioritize short-term stability over long-term balance. In environments where purchasing power feels uncertain, capital naturally searches for scarce, tangible assets. Silver fits that role. At the same time, industrial demand continues to evolve. Energy transition, electrification, automation, and digital infrastructure all rely on silver's conductivity and reliability. Much of the silver used in technology is not fully recoverable, meaning usable supply gradually tightens. That creates structural imbalance. From an intermarket perspective, Silver acts as a bridge asset. It responds to monetary stress like gold, but also reacts to economic expansion like copper. That dual sensitivity makes it highly responsive to capital rotation. When money leaves overextended markets, it does not disappear, it relocates. Silver offers liquidity, volatility, and leverage. When flows arrive, percentage moves can surprise even experienced investors. Most investors wait for confirmation. They wait for headlines. But by the time confirmation appears, a large portion of the move has already happened. Early phases of silver cycles are quiet and uneventful. That is where we are now. Preparation matters more than prediction. Silver does not reward impatience, but it punishes neglect. Its current environment is defined by compression, neutral sentiment, tightening supply, persistent demand, and growing macro uncertainty. When these forces align, markets do not drift, they transition. Major trends begin in silence. They build slowly. Then they accelerate faster than expected. Silver is not screaming for attention. It is whispering to those who understand how cycles truly begin.